Hi and welcome to this live currency strength indicator table video with me, John, on this Monday the 6th of February. Here you can see we have our tables in front of us here. We have two types of tables. We have the trend traders table and the day traders table. These are showing us the same studies but just highlighting different time frames. The currencies that are highlighted in green shows there's a confluence between the time frames on those currencies, and that's where we'll be focusing our attention in these videos. The tables auto update every 15 minutes 24/7, meaning that our members can see how the markets stand right now in real time. So what can we see, or what are the tables showing us today? Well, we can see that the US dollar tops both tables, being the strongest currency. We saw quite a lot of momentum into the Friday US session, which saw the US dollar kind of springboard itself to the top of both tables. That's followed by the Swiss franc being the second strongest currency on both tables, followed by the Canadian dollar being the third strongest currency on both tables. On the weak side of things, however, we have pound being the weakest from a trend trading perspective, but on the lower time frames it is the third weakest currency. The New Zealand dollar is the second weakest currency on both tables. However, the day traders is topped by the Australian dollar, so we're seeing some momentum in the Aussie to the downside at the moment. So we're going to take a look at pound US dollar and Aussie US dollar, so make sure you stick around. In this video we're going to point out some key levels of interest that we should be watching for in the market. So let's kick it off with pound US dollar. I've got pound US dollar open behind me, and we can see that price has rejected the 124 handle here. Previously was the highs back through November. We've also come into this kind of area of resistance on the daily time frame, which is that 124, but a little bit further back. So 124 handle really important to pound, and we can see that price really struggled to trade above it until recently, where we've had the price then trade to the downside. So nice big rejection of the 124 handle. The next sort of level of interest is the one spot 1850. We've also got the 200 moving average running down through here as well, which currently rests at one spot 1959. So I'm expecting a little bit more downside here in cable now that we've found that sort of double top pattern. The one spot 1850 is also sort of the neckline of that double top, which makes me think that price could come back down and retest this area. If I go down to a lower time frame, so the daily time frame, you can see that in a little bit more detail that we've got that nice aggressive close below this trend line support as well, which formed back in October. 118.50 was a really strong area where price turned around and moved up to the 124 handle. So almost looking to see if we're kind of trading within a bit of a range here between that one spot 18.50 and the one spot 24. Can we kind of see price come back down into this area, maybe trade back to the 124, or see then a break and continuation down to the 115. Now, I kind of think the price is going to make its way down to the one spot 15 handle. The Bank of England have talked about recessions and things like that, which is never a good thing. So, you know, I'm expecting an extension to the downside, but I'd only expect that if we were to trade below the one spot 1850. So that's what I'm going to be looking for. If I go down to the 8-hour time frame, I've just spotted an extra couple of levels of interest. You can see that the one spot 21 handle here was used as support here, and it was also resistance back through this area as well. So I'd like to see the one spot 21 handle retested. If not, I'd like to see some retracement of the move that we've had here, because that was quite a significant move to the downside. If I just measure this out, this was a 360 pip move, which isn't unconventional for pound. However, after quite a move like this, I would like to see some kind of pullback before I like to get into the move to the downside, just because you've got a little bit more security in terms of if price was to pull back into this area here, I've got a good place where I can place my stop losses. The reward to risk is better as well. If I'm trading in and around this area here, let's say I want to short below this low with a stop above this high, you know, although I do have a good reward to risk ratio, my stop loss is in the way of potentially price filling this area and retesting resistance, you know, a safe stop for me would be above this high or above this high, which then the reward to risk really does diminish after that. So I would like to see some kind of pullback here. If not, can we get some kind of consolidation? Like I said, at least then we've got an area where we could place our stop losses safely before looking for a continuation down to the 1850 and the 200 moving average. So that's what I'm waiting for here. I'm not going to jump on the sort of short that looks to be developing here, like I said, because I want to see that strong reward to risk. So you've got the 1.21 handle. We've also got the 1.22 as well. If I go to a lower time frame, like the 4 hour, you'll see why I've highlighted this area. It's because there was a sort of bullish candle before seeing the continuation down. So I've just highlighted the 122 as well as an area where we could find resistance in the market. So keep your eye on pound US dollar. The next sort of market that I'd like to take a look at is Aussie, because or Aussie against the US dollar, because Aussie is topping that day traders table. So let's go flick it over to that chart. And you can see again we've kind of formed a similar pattern to pound US dollar, where we've had this sort of double top created. We've basically traded from the 0.7125, which were these highs in here. We double topped, we've traded to the downside. On a weekly time frame, if I just zoom in a little bit, you can see that the 0.6875 kind of comes into contact with previous weekly highs. So we could be coming into a little bit of an area of support here. You can see I've got multiple trend lines here as well that kind of intersect around the 0.6075 down to the where the 200 moving average is, around about the 0.68 handle. So in and around this sort of 75 pip zone could be where price does find a little bit of support, despite the sort of momentum in the market being short at the minute. I would again like to see some kind of pullback, but we are very close to that level. And what I'm expecting really is if price was to come into this level, maybe even into the trend line support here, maybe even into the 200 moving average, would we get a bounce? And then, at that point, I'd be looking to see, would we get a lower high? Because at the moment, we've got sort of a higher high, which formed with the double top pattern. Price has then traded, formed a new low. So if this sort of trend is going to continue, I'd expect a lower high to come in at some point. Will that be back at the 0.7 handle where this neckline is, or will price kind of come short of that and then trade to the downside again? That's what I'm kind of looking for here on Aussie against the US dollar at the moment. We do have some data out of Australia this week. It is the RBA rate statement, and they are looking to hike interest rates from by 25 basis points, as well as the factors we've got inflation rising in Australia. So the RBA may actually have to act quite aggressively, which could give a little bit of a boost to the price, which could then bring opportunities at resistance levels. So that's something to be aware of as well going into this trading week. I hope that all made sense, and I hope you enjoyed the video update, and I look forward to speaking to you in the next one.